Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So today we probably will not take a look at the gold market because actually it doesn't take part in all this mess around the First Republic Bank, the volatility that we see currently on the Forex market, on the stock market, and gold mostly stands flat without any response to it. Besides the performance on the euro currency, I suggest it's mostly driven by its own European Union driving factors, but not some common things, not because of the dollar performance or something of that sort, because you do not see the same action on other dollar-related assets, for example, in the gold market. And today instead, I think that it makes sense to provide a bit more background for actually why in today's euro video we said that we're not actually really fascinating when taking the possible short position. And here's the cross-market analysis could help us a lot. So I very often use it, and sometimes it could really shed some light on the difficult moments if you do not know, you can't identify direction, or you have the really tricky situation on some assets. For example, as today's in euro currency, we have a grabber and we have the potential upside butterfly with the possible upside performance. And when you have these tricky moments on your favorite trading currency, you could take a look at other currencies and trying to suggest what really could happen. And here today we'll take a look at the Japanese yen and on the Great British pound, and even on the cross of the GPI to the Great British pound. So starting from the cable, you probably remember what we talked about, the picture on the daily chart. As we said that this potentially might be the double repo sale pattern. That was a few weeks ago when the market actually has forming this drop. The market was standing below the 3x3. That was the point where we have talked about this. Now take a look what's going on. Market within the whole week can't start the downward action. So it stands just flat. This is not typical for the double repo because this action to the downside suggests the capitulation of the bears and bulls. And actually after that, market should, after some small pause, short-term pause, should start downward action, but it hasn't happened. And besides, even in sell-off that has happened yesterday, now it's turning up. All this performance starts taking the shape based on the negative MACD, the bearish MACD starts to take the shape of the bullish dynamic pressure. This market is forming high lows, and we suggest that with high probability of the degree we will get upward action on the cable in the nearest time, because here is not the way how market should behave for the double repo pattern. Besides, if you will take a look at a few additional moments, you will see more confirmation of this possible scenario. First of all, on the 4-day frame chart, take a look. We have this ABCD pattern and uncompleted XOP stands slightly above the market, 2660 approximately. This is first moment. Second moment, take a look at the recent performance. That was initially, I just restored the previous picture. So maybe you have seen by yourself previously, but just to remind you that initially was, let's take a look, head and shoulders pattern. That was really perfectly corresponds to the idea of the double repo. So especially in the recent sell-offs, market started forming and this head and shoulder has been formed. Let's take a look what has happened now. Market hasn't quite reached the neckline. And return it back up, now showing upward action. So this is not good for head and shoulders pattern as well, especially after the strong sell-off on the head. Here's definitely bears showing signs of weakness. This is not the performance that's typical for the head and shoulders now, as you can see here. Market starts forming some kind of the pennant action or something of that sort. So that is mostly start looking bullish. As for suggesting some upward continuation here. That's why it's another sign that in the euro currency it's indeed grabber might be erased, and that's the reason why today I said that personal right now I do not want to sell based on the grabber. Maybe tomorrow on some great domestic product releases, on the consumption expenditures release, retail sales release, situation could change in favor of the dollar, and everything still could start moving down. But in the current point, it seems that risk is not worthy of trying to take the position here. The only exception, as I said, is just that if you would like to take the position, just take it in a small size. Cut your regular trading volume for 1/3 maybe, and try to trade it with 30% of your position. And this is possible, theoretically possible to do. But this action is one of the reasons why we suggest possible upward action. So another story on the Japanese yen. On the weekly chart here, we could get this stuff. It's also suggesting rising of the yen against the dollar. Yes, it might be background purely related to Japanese yen, not because of the dollar weakness, but in general, this is also this kind of action. If we see that upward action should happen as on the euro currency, as on the Great British pound, as on the yen, it means that, and if we'll take a look at the cross market performance cable to the yen, this is monthly chart, we have uncompleted targets here. If both will start rising, cable should rise stronger than the Japanese yen to complete these two targets. We have the XOP, this minor ABCD pattern on the monthly chart, and we have big COP, this ABCD pattern. Now both of them stand slightly above the market. So current market 166, it will be somewhere around 173, 176. So for the cross market, it's not really big distance, especially on the monthly chart, and that suggests that, well, this action could happen. So all this stuff together tells us that in the current circumstances, it might be a bit really, well, a bit too risky, just trying to take the short position on the euro currency, at least in the current moment. So the same story on the cable. If you're trading the Great British pound currently, it would be better to not take the short position based on the things that we have just discussed here on the daily chart and on the 4-day chart.